Let's talk today a little bit about guns, the Second Amendment. Oh wait, this is a finance class, not my business law class. Let's talk about gun companies, and there's a couple of them were chosen, different ones by students for the project two, and they in fact are the only two publicly that I know of. Please correct me if I'm wrong, but the only two publicly traded gun companies. I think the rest, the ones that we're oftentimes the ones that we're even most familiar with, are not publicly traded. They're privately owned or privately held. Some of them together, names like Winchester, Remington, Henry, Colt. I think those are all privately held, but again, I might be wrong about that. And as you guys do your research, you might find out more about that. Well, the two that were picked that are publicly traded are Smith & Wesson and also Sturm Ruger, or short, we would probably refer to it more as just Ruger, right? They're similar companies in terms of size and those types of things. And let me go through to a quote just real quick, because one of the dangers, and I was talking to or visiting with one of the people that had chosen one of these gun companies, and I said, you got to be careful. Oh, of course, it's not going to work quite like I would like it to. You got to be careful how it lists the industry, right? Because that's a part of your assignment, is going to be to tell me the industry that your company is involved in, and of course it's not going to work now. And in this case for Smith & Wesson, and I think for Ruger, both, it lists the industry as being, it's aerospace and defense. Maybe. Smith & Wesson just doesn't have a lot to do with aerospace, and they may sell some guns to the Defense Department. That I'm not sure. If you're doing Smith & Wesson, you could sure tell me that. And Ruger, same thing. I think Ruger is listed as an aerospace. And again, these two companies, to my knowledge, are the only two gun companies that are publicly traded. So I think you'll be better served by comparing them to each other versus comparing them to this industry. I mean, what does Smith & Wesson have to do with Boeing or Airbus or United Tech or Lockheed Martin? The answer is not much. And so these indicators relative to the market, let's skip those, okay? When we're talking about these two companies, they may be very relevant for your company. Retail seems to do a little bit better job of matching up with the industry, and some of the other industries do as well, but this is one that it's not. And so my reminder, even if you're not one of these gun companies or haven't chosen one of these gun companies, be careful of who they list as your competitors, and make sure that it kind of fits. So beyond that, I kind of just want to flip into the financials of these two companies and take a look, and again, look for things that I'd probably kind of like to see in the report, and maybe compare them a little bit. It's amazing, these are in millions, of course, but they're relatively close. If you look here at 2015, now I gotta make a point here though soon. Oops, I got that one on the balance sheet. Let's go to the income statement so we can compare them. For 2015, this is Ruger sold $551 million in sales, and Smith & Wesson $552. Now the trailing 12 months, 683 here, and again I gotta explain something there. In the trailing 12 months here, this is for the whole year of 2015. You can see they're identical. The difference that we have here is that Smith & Wesson has a different year end, and that's noted up here, okay? And so you got to be a little bit careful here. Their year end is in April, okay? And so while this is the year end in April of 2015, it's really for the most part sales that took place in 2014, right? 8 months of this would have been in 2014, and just the last 4 months in 2015, and yet that's listed as that year. And so this is better compared to Ruger's 2014 results, okay? And that might be a little bit important, because the one thing that I want to point out for both companies is that if you look at it, revenue in 2014 kind of spiked here for Smith & Wesson, right? And this would be mostly 2013, I'm sorry, mostly 2013. And it spiked here for Ruger in 2013. Okay, what happened in 2013? I need to know. Okay, and this is where you report the number to me about the spike, if you want to call it that, in revenue. So report that to me, but tell me what caused it, and maybe too what we had nice increases here, but what's caused the subsequent fall off, if there is a fall off. And then in Smith & Wesson's case, wow, the trailing 12 months, so we're seeing a huge rebound. This means that they're just about due, right? At the end of this month, it'll be their annual, okay? And so this is probably, if I had to guess, this would be through January. So their trailing 12 months here was a huge increase, okay? A few things probably happened for Smith & Wesson. I'll pick on them a little bit, okay? Of course, one is that we're in an administration that has presumably and hasn't made any headway, but at least talks a lot about gun control. And every time the administration or anybody in it mentions gun control, everybody heads out and buys guns. Okay, so that may be part of it. But for Smith & Wesson, I'm going to go look at their balance sheet, and I'm going to bounce here and show you something. Smith & Wesson took on where do I got to come down to liabilities. Look at that long-term debt, 50, 44, so it was kind of normal, but it kind of bumped up here and bumped up even more there. Ooh, well, that's kind of weird. What happened? Okay, what happened? And I need whoever's doing Smith & Wesson, you need to tell me. Okay, that obviously they took on a lot more debt for whatever reason. They wanted to do something. I know what the reason is, but I want you to tell me. Okay, and that reason then may well have contributed to their. In fact, if you look at the cash flow, you'll probably kind of figure out the reason. But you also need to dig into the annual report so you can tell me why they chose to do that. Not just the reason, right? Tell me why. So their income and their revenue, anyhow, I don't know for sure about their income and how much that's going to go up, but their revenue increased dramatically, and it may be partly due to that reason, right? Maybe they invested in some new technologies. Maybe they made an acquisition, something like that, right? Okay, and so that's kind of important to know. But so please try to find that for me, and for all of you that aren't doing Smith & Wesson, look for those types of things. Those are the things that kind of jump out and do kind of intrigue me. Now, so again, we look at each of these companies and we see, some volatility in both the revenue and the earnings. And I think that's what's important. One of the important things to report on in this case for these two companies is volatility. And that volatility is due to some of the things that I talked about. And you'll probably read about that in the management discussion when you're looking at the annual report. Probably the only place you're going to find it. Okay, you might find some news stories and whatnot that would relate to that, but the the management discussion is going to be an important thing. Okay, so talk about the volatility and my concern for both of these companies is what happens if we have a change in administration. Okay, it could go either way, right? We may get somebody that's a big proponent of the Second Amendment. And actually, that would be bad for gun sales. It's kind of a contrarian indicator, right? We may get somebody that's kind of an opponent of guns or the Second Amendment, and that could be a very positive indicator, and we don't know. But I think what's important is if there's a management discussion about it and how they're planning for that. And I'm going to switch over to the balance sheet again here for both companies. I want to look at it, and I'll tell you one thing that I find to be kind of important important. The 175 million in debt for Smith and Wesson, notwithstanding, you've got a couple of companies here that have, relatively low debt, and especially in the case of Ruger. Okay, it has current liabilities of 82 and total liabilities of 88 million. The 82 and the current liabilities are, they got accrued liabilities, which is accrued payroll, accrued taxes, those types of things that are fairly consistent. I'm sorry, wouldn't be taxes because they're the one above, but they've got accounts payable. Other accrued liabilities are again, payroll, a few things like that. You could sure look at it, but you can see that it's fairly typical for them to have those and some taxes payable. So really, Ruger is a company that is, you would call them debt free. Okay, you really would. Deferred, again, here's a deferred taxes. So you got a taxes payable and you've got a deferred taxes that end up being a decent amount of those liabilities. And that's when you're on an accrual basis accounting. You're just always going to have those. Okay. And so really you would say that they're debt free. And for Smith and Wesson, they took on, here, obviously if you went back to here, they had 83. They had some long-term debt. It looked like they'd been keeping fairly consistent. But for the most part, you would have called them close to debt-free. But they took on some leverage. Okay, and so for Smith & Wesson, we need to know that. And if you're Ruger, you need to make some comparisons to Smith & Wesson there about those things. Okay, so financials are great. Don't forget to look at I love looking at the key ratios too. Okay, I'm going to click on both of those. It'd be interesting to see how these two companies compare. Gross margin is always a big deal. Okay, ooh, look at that. Not only, remember Smith & Wesson, we talked about 2014, 13, 14. Look at that in 13 and 14 and even on into 15 in the trailing 12 months. They've had huge increases in their gross margin. I would call those huge. Okay, I mean, you might look at them and say 31 to 37 doesn't sound like a lot, but 6% increases. Plus, they had huge increases in their revenue. So 6% better gross margin on 588 million. That's over 30 million extra income because they bumped up their gross margin by 6%. And then they added another 4% here, plus an increase in sales. Huge, just absolutely huge. Okay. And you'll see that here in this operating margin, right? Okay, this tells you what their operating income was, and so you see an operating margin that was negative here, and negative here, and 9, 10, and all the way up to 24. Wow. Okay, and trailing 12 months 20. So good looking stuff. So, that's important. Ooh, shares. Well, that's kind of interesting. So they had a big increase in shares way back in 2009, 2010. My guess is that was the Great Recession. If you want to go back that far, that's fine. If you're running out of things to put in your report. And so what they probably did, they probably had to issue some stock, okay, to stay solvent maybe even. Okay, now it looks like in the last couple of years here, they've bought back a substantial amount of stock. And so here they were bleeding cash. Here they've been generating cash, and they've been buying back a little bit of stock. So that might be interesting to know. It did go up a little bit from there to there, probably some compensation things. So Ruger, gross margin, same thing. Look at that. Again in that same time frame, because the year ends are a little bit different, but in that same time frame, not quite as good. Okay, not quite as good as Smith & Wesson, so that'd be interesting to take a look at. Where are they at for shares? They, on the other hand, been pretty consistent in their shares outstanding. Probably some rounding, probably again a little compensation, but they didn't have to issue. Why is that? If I had to guess, go back to that debt thing. Okay, that Sturm Ruger has never had any debt. it doesn't look like, over a long period of time. And as a result, even when the recession hit and sales probably went down, they were able to maintain without having to issue any stock. I don't know if they took on any debt. It would be interesting to see if they might have taken on a little bit of debt back then. It's possible. So read through that. These key ratios are really cool. Spend some time, whatever company you're doing, and take a look at these, and you'll often find some fodder for your report. Look at this, a gross margin that was 14.5% in 2006. It jumped up nicely in 2007. There are probably some weird things there. But here we hit 37.6. And again, that's huge. What are they that report that number, right? I never want you to not report the number, but then I want you to tell me what caused that. What has caused, were they able to increase prices? There's only two things that go into gross margin, right? Prices and costs, okay, and variable costs in particular. And so were they able to increase prices, or were they able to reduce their costs? That's what I want to know. And how, right? How did they reduce costs? Yeah, hey, maybe they shipped all their manufacturing overseas and were able to save a bunch of money. I don't know. Okay, those are good questions. Okay, that I would like to have answered, and so everybody needs to kind of look through gross margins, look through operating margins. You may find where gross margins have gone up, but operating margins have gone down because they've spent money in other things. Okay, aside from those variable costs, maybe they've had some increased fixed costs or things like that. So spend some time, and if you got some questions about these things, boy, let me know. Let me know so we can sit and talk about it a little bit. Okay. Ruger pays a dividend. I don't know, is Smith & Wesson paying a dividend? No, Smith & Wesson has not paid a dividend. Okay, so they're retaining that money. Maybe growing. Maybe they're investing it back in the company. That could be. Okay. Interesting difference there between the two that, person ought to take a look at. So I've probably gone on long enough yet. I don't want to spend too much time on these because I know I'll lose you, but take a look at those. Enjoy looking at the numbers. Enjoy figuring out where that comes from, and boy, let me know if you got some questions. So thanks for listening, and we'll talk to you again soon.